Hi, this is Alan Brochstein, and I'm coming to you from Houston, Texas. I think you're going to enjoy my conversation on professionally cannabis.
Where do they go, the smoke rings I blow each night? Oh, what do
Hello,
they do?
and welcome
those
back to the
circles
Professionally
of
Cannabis
blue?
podcast. We're just about to embark on season 3. Crazy to think we've made it this far, and we are going to do things a little bit different this time. But before we get to any novelty, we thought we'd just give you some of that good old-fashioned home comfort with your hosts, Oscar Houseman, that's me, and my beautiful co-host, Jonathan Weiser, that's he.
What a lovely way to be greeted. How are you doing, Oscar? And how are you doing, listener? Great to have you back, or perhaps for the first time. This episode, not only being the start of season 3, actually marks quite a interesting and significant landmark. Landmark? What's the word for it? Milestone for us. And that milestone is actually, it's also our 50th episode. In cricketing terms, I'd be lifting my bat to the stands, but we won't be taking our helmet off and celebrating with the crowd until episode 100. But our sports punditry people are not here for, and our cannabis punditry they are. So, Oscar, with that in mind, can you tell our listener who we had in the pod this week?
Well, if our listeners ever so much thought about spending any money on any sort of cannabis stock, they've probably come across this man, Alan Brochstein, best known as the co-founder of New Cannabis Ventures and 420 Invest, but he also has a humongous presence on Twitter. It's fair to say that for anyone who cares about cannabis investment, this is going to be an interview that they'll enjoy. So I know it's been a long time since you've had our interviews, listeners, so we won't dilly-dally further. Let's get on with the show.
Where do they go, the smoke rings I blow each night? Oh, what do
It's a
they
great
do,
pleasure to
those
welcome to the
circles
podcast
of
today
blue?
Alan Brochstein, the founder of 420 Investor and the founding partner of New Cannabis Ventures. As one of the first investment professionals to focus entirely on the cannabis space, Alan's name has been synonymous with the cannabis investment community for over 7 years now, providing market-leading financial news and due diligence services on companies globally. With this in mind, he is the perfect person for us to speak with about the maturation of the global cannabis industry. Alan, welcome to the Professionally Cannabis podcast.
Thank you. It's really great to be here, and that was an excellent introduction.
We're glad you like it, Alan. And so we'd love to ask you what we ask each of our guests at this point, which is what led you to the plant?
So I'm getting so old I can't remember, but kidding aside, it's actually literally 8 years ago that I totally stumbled into the publicly traded stock arena for cannabis. I was a little bit embarrassed in 2013 that Colorado and Washington had legalized, and I totally missed it. And then the other thing I was embarrassed about was that there were actually publicly traded stocks. I had no idea. And this had actually been going on for literally 4 years. And I read an article on Seeking Alpha where I was one of the most popular contributors. If your audience isn't familiar with Seeking Alpha, it's a financial blog, basically. So I read this on Seeking Alpha, and I was like, wow, this is just horrible. These companies are not good companies. They were OTC penny stocks. So that's what really led me into this. And I developed a reputation as the sheriff of the Wild West, which is what it was, really trying to warn investors that while the cannabis opportunity was going to be great, these were not the horses to ride. And that turned out to be pretty true.
How did you go about gaining credibility, talking about cannabis companies and the industry as a whole with other investment professionals when some of those companies that you're sort of referencing perhaps weren't so credible in themselves?
Sure. So I recently, when I say recently, in May, I coined the term third wave of cannabis stock investing. Really, with the recent pandemic kind of marked the bottom of a bear market and the beginning of what I think is a new bull market. And so the time that you're referencing was what I call the first wave. And, depending on how you want to date it, I think the right way to date it is actually in early 2013 is the way I would define it, because the Colorado and Washington had legalized, and all of a sudden there really was something to talk about. Oh, and I didn't mention I enjoyed cannabis when I was in college and slightly afterwards, but I'd become so disconnected, and I was never educated about the medicinal aspects and, importantly, the social justice issues. So, to answer your question, in 2013, when I stumbled back upon cannabis, I spent a lot of time learning about the medicinal benefits and the social justice issues. This was a time when Sanjay Gupta did the documentary Weed, for example. But
Hmm.
I really got up to speed, and I started, I had a nice big platform through Seeking Alpha where I started publishing entirely negative articles on companies, pointing out their illegitimacy. So I did spend the first few years trying to make sure everybody understood that there were very few legitimate companies. We were starting to see some come onto the scene. I think that the deck was stacked against a lot of them. They didn't have good access to capital. They were limited to the OTC. So when Colorado and later Washington legalized, but mainly Colorado, it did create a lot of interest in the space. I remember being interviewed by BBC, for example, in January of 2014. I figured something was wrong if BBC was calling me up in Texas. But with my subscription base and continuing to publish on Seeking Alpha to some degree, I was able to educate the general public as well as my subscribers. And there weren't any real institutional investors at the time. This is very premature. So I was really dealing with high net worth individuals and a few family offices. But those first few years, difficult to have any sort of real financial discussions. And quite frankly, they weren't truly necessary until that second wave. In the United States, there wasn't a lot to talk about financially. The companies that were publicly traded didn't represent the industry. So what we saw happen was that the focus shifted to Canada, and I was very early to follow that market closely. This was right actually in 2015, and right before Justin Trudeau was elected prime minister.
Hmm.
And what this ended up doing for the United States was that there was a research community that developed, the investment banking community in Canada, not necessarily the tier one, they came later, but the lower tier investment bankers and analysts started to cover the Canadian LPs. There wasn't a lot going on with them. There was a federally legal medical program that was developing, but paled in comparison to the market caps of these companies. And that really helped in what I call the second wave for the United States, because all of a sudden you had the ability to raise capital and you had analyst coverage, and we could shift the conversation towards real companies and talk about it in traditional financial terms. And it was really in mid 2018 where we saw Green Thumb Industries in Medman go public, followed by Trulieve, and then most of the largest MSOs that we know today.
And you mentioned earlier that for a long time, your views on some of the companies that were in the cannabis space was quite damning. Now, in terms of when that shifted for you and you started writing sort of with a more positive slant on certain companies, what would you say that specifically you were looking for from a cannabis organization that, in your eyes, made them a sort of respected and credible shout then? And
Yep.
how has that changed and evolved to what you would look for from the most credible and encouraging companies in the industry now?
Sure. At New Cannabis Ventures, we had a thesis that revenue was going to matter, and then we supplemented that thesis with profits are going to matter. So we created the revenue tracker. I don't remember exactly when, but there just wasn't a lot to talk about really until we created this tracker, which was a little bit ahead of the time. And we have continually raised the bar on what it takes to qualify. So, I think for me personally, one of the barriers to overcome was in the United States, yet we had companies that were trading on the OTC, and they were generating revenue and they looked like good companies, but there's a little bit of a issue for most investors even to today with the OTC. It is not where respected companies trade. In late 2015, there were a couple companies that began trading publicly that I thought looked good, and I may be off by a year on one of them, but I believe that's when Kushco uh, it was called Kush Bottles then, it's now Kushco Holdings, began trading, and they were a packaging company, an ancillary company. And you could see that they had revenue. They weren't profitable at the time, but you could see the growth of the revenue. And then it was either in late 15 or possibly in 2016 that a company called Grow Generation, which is now on the NASDAQ, began trading. And it too, it was a hydroponics store, serving the industry. And it too had revenue. So these were, you know, the universe was suddenly having some companies with some revenue in it. I think another thing that the REIT, Innovative Industrial Properties, went public on the New York Stock Exchange. That was in late 2016. And it was a real disaster, actually. The stock was priced at 20, it went to 15, it spent the whole year below 20. But I think these were the beginning of a recognition of the fundamentals. But if you fast forward a little bit, in the United States, when these public companies emerged in 2018 with revenue, they weren't profitable yet, but they had revenue. It was really the first time that the plant touching companies, and for your audience that may not be familiar, they went public in Canada on the CSE, and most of them, some through the NEO. And this was really the time when you could have financial discussion. And if you fast forward, last year they started to become profitable. There's definitely been an evolution, and I've always said that I anticipated that I would get to wear my CFA hat again. I think for me, a lot of the earliest years in following this industry were more about being a sleuth, trying to figure out who was a criminal versus who was legitimate, trying to understand the way the OTC worked, the over the counter markets, trying to gauge retail investor sentiment, since that was really what was driving the stocks. And now we're in a totally different world in this third wave, where we've seen continued evolution of the investment banks and the analysts, so that we now have tier one companies covering the space.
So thematically, in the early days, you were sort of looking to see if the companies were even legitimately doing what they were saying they were doing, I suppose, is one way of looking at it. So now you're looking for sort of different red flags. What sort of things do you look for in this third wave that makes you say, I don't really trust these guys?
It's more about execution. So it's not about whether or not you trust the people. There have been some issues where it creates barriers to trust. We've seen a couple companies, and they've done M&A where they buy something where insiders are on the other side of the transactions. That is something that continues to bother me. Those types of things. But in general, I think investors, if they're investing in the types of companies that are on the new Cannabis Ventures revenue and operating profit tracker, I don't think trust is really the issue. It's about confidence in the ability to execute would be more of
Yes,
the
I
issue these
suppose
days.
by trust, I didn't mean do we believe what they're doing is as they present it, but I
Yeah.
meant sort of who do you have in confidence in to weather the third wave?
Yeah, that's a good question, and I should have a better answer than this, but I will tell you, I used to say something that people laughed at, but it was so true. The core competence of the Canadian LPs, really to this day, sadly, has been in capital raising and not in execution fundamentally of their business. And it was such a disappointment to see these guys with a running head start and access to capital and investors, and they really blew it. It's really discouraging when you think about it. And one of the things that has given me more optimism about the United States, which is such a tough market, we could talk about that, but uh, these guys and gals are scrappers. They have not had the luxury of having investor money thrown at them hand over fist, raising capital at silly levels. No, they've had to really fight, and I think that's made the American cannabis industry more promising. One of my criticisms right now of the American cannabis industry is that these are holding companies. And I don't think investors appreciate this, but because there's no interstate commerce in the United States due to federal illegality, cannabis operators run state level businesses. There's each state operates under different rules. There's no production in California and shipment to Illinois. And so because of that, these guys and gals are running separate businesses. Unfortunately, the disclosure levels are weak, and they're not breaking any rules. But I think investors would be more confident if they really understood what was going on at a state by state level, because the market dynamics are greatly different. Some states have very limited licenses where that leads to higher profitability, especially at the beginning when supply is constrained. And you'll have markets like I'm watching Michigan, and there's not a lot of public companies operating in Michigan, but we've seen the price. They went legal at the end of 2019, so there's been really one full year, and so now we're starting to see year over year comparisons in not only revenue but also in pricing. The state of Michigan does a good job of giving data that allows us to understand what's going on in the market, but most states don't. So there's been a lot of growth in Pennsylvania. Many of the American companies are deriving significant revenue and profit from their operations in Pennsylvania, but we don't really know the dynamics of that market like we do, for example, Michigan. And in Michigan, we've seen great growth in revenue, but it's been greater growth in unit volume because pricing has been coming down, which is not surprising. But I think to be more confident, it's not so much about the people, it's about the disclosure levels.
And ahead of federal legality of cannabis, how do you see the cannabis industry in the United States in particular developing? And perhaps as an extension of that, you mentioned that currently we're in wave 3. Do you see federal legality being a blocker to progressing to wave 4? And if
Yeah.
not, why?
So I have some very strong views, and I think one of the biggest mistakes that investors make involves federal legalization, and really on two fronts. Number one, that it's necessarily a good thing for investors. It's a good thing for a lot of reasons, but is it a good thing for investors? And the timing of it. So I don't know if legalization will happen in wave 3. I think this is the first time that we have a sustainable bull market. I think that right now, people are a little bit ahead of themselves on the timing of federal legalization. So let me walk you through. So let's go back to Canada. In Canada, they had a federally legal medical cannabis program that was 2 years old when Justin Trudeau was elected at the end of 2015. It took them 3 years to, to have that first sale for adult use or recreational, as some call it. And so you had provincial issues potentially they had to work out, but I'm not sure exactly why it took them 3 years. Very complicated process. So I like to tell people that because we now in the United States, the biggest problem in terms of moving towards legalization was Mitch McConnell would not let any type of legislation be even discussed. Nothing in the Senate made it to the floor. At the same time, the House, which was controlled by the Democrats, did some things. They were symbolic, of course, but at least the tone was in the right direction. And so now, with the change of control in the Senate, I think people don't understand that it takes 60 votes to actually enact a law. And so I don't think between the long timeline, which I'll explain in a moment, which is not just saying, well, it took Canada a long time, there's more to it than that, and the fact that there's just not a huge consensus right now, that the Senate would legalize. So let me explain why I think there's some complex issues that'll slow it down. So first of all, this whole idea of interstate commerce. We have a whole bunch of states right now that are generating significant tax revenue, and that could be at risk in interstate commerce. I think it's very complicated. Another issue is taxation. In the United States, there's this evil form of taxation that was created in the 80s, but it's certainly hurting the companies today, called 280E. And for your listeners that aren't familiar with it, essentially cannabis companies pay federal taxes on their gross profit. They cannot deduct anything except cost of goods. So consequently, the effective tax rate when the companies mature can be as high as 65 to 75%, way above normal tax rates. So I think that is a complicated thing for the federal government in terms of how to do the taxation. Another one that people don't talk about is an issue called social equity. And so I happen to believe that we as an industry should embrace the social equity initiatives. And many in the industry are. I think investors don't necessarily pay enough attention to it, but it's basically how do we create an industry that rights some of history's wrongs when it comes to people of color that have been, unfairly negatively impacted by federal illegality. And so we've seen some of these issues at the state and local level really lead to some delays and slowdowns in implementations. And so I already know that this is a big issue at the federal level within the Democratic Party. And so because of this, I think it's going to take a long time to actually get to what people would call legalization. Now, the good news is that there's some really good things that could happen between now and what people imagine is this great thing, federal legalization, which I'll tell you some of the risks there in a moment. But one of the things that I said ahead of the elections was if we can get Mitch McConnell out of control of the Senate, there's a chance that we can make I don't want to call them baby steps because they're bigger than baby steps, but there are some key areas where the federal government could improve the situation. And I'll keep it brief. There was a bill that was introduced that passed the House, didn't get discussed in the Senate, called Safe Banking. I think it has bipartisan support, and I think it can pass. I believe there's a reasonable chance, and this would be a game changer for American cannabis companies, a reasonable chance that we could see an enhanced Safe Banking Act. And what this would do would be to allow banks to have a little bit of a safe harbor. So right now, banks do work with cannabis companies, but it's extremely complex. A lot of them don't want to take the risk. So the industry is underbanked. It's not unbanked like some people assume. And so this is a public safety issue. A lot of cash in the system, and that creates a big problem. But beyond that, there are some things like MasterCard and Visa won't allow cannabis dispensaries to use, customers, cannabis dispensary customers to use their cards. That's not a federal law, it's a gray area. And so hopefully the legislation would give them a safe harbor so that they don't have to say no. I laughed, just say no, Ronald Reagan in the 80s. But the other thing that's bigger is this whole listing thing. As I said earlier, these companies went public in Canada through the CSE primarily, and they trade on the CSE, the junior exchange in Canada, as well as on the OTC. And they aren't, because of this, they are not available on platforms like Robinhood, who does not allow these stocks. So a lot of retail investors are shut out. Additionally, a lot of institutional investors, if they can't buy Canadian denominated securities on the CSE, there's a chance they can't buy them on the OTC. We are starting to see institutional investment. It's a major theme in the US companies. But hopefully, this enhanced Safe Banking Act would give the New York Stock Exchange and the NASDAQ some safe harbor as well. So we could, short of legalization, this is the bull story. We could see these changes that would really open up the investor base, institutional and retail, to American cannabis companies. Not that it's closed now, but it would make it ubiquitous. And so that after that, I want to just say federal legalization could be a disaster for publicly traded companies. And I don't think it's worth spending a lot of time on, but I just want to give you some examples. So first of all, CBD was thought to have been legalized in November of 18 with the Farm Act, and hemp was legalized. CBD derived from hemp. I mean, literally 5 minutes after the bill was signed, then FDA Commissioner Scott Gottlieb said, hold it. No, the FDA is going to regulate CBD. And the whole industry has been in disarray since then. And I believe there is a chance that we could have the FDA regulating the THC, or just the entire cannabis industry. That is a non-starter for a lot of these companies. Okay, let me talk about another issue quickly. So in this state-by-state system that we have now, operators have to put up facilities and duplicate them in each state. And so you end up with a whole bunch of small facilities just serving that state. And on top of that, these American operators, they were struggling for capital last year, and they did sale leasebacks, and the rates, they're non-cancelable, and the rates are egregious. So you have the American operators that are locked into these inefficient facilities in terms of trying to serve a market that has interstate commerce. So that's a whole nother issue.
Something that answer provoked or sort of brought up was the comparison of Canadian firms to American firms. And I think in general, I agree with your thesis that the Americans had to fight tooth and nail to get every bit of revenue. So perhaps they're sort of growing at a greater clip than the Canadians that managed to get a lot of retail investment and then built big facilities and then mothballed them, or what would be
Exactly.
like. But to bring it to our perhaps more international and European audience, what do you think about international trends in general? I mean, so for instance, I might think that when regularization or legalization comes to America and those firms are actually well banked and can expand internationally, they'll just gobble up all the decent international cannabis plays and we'll have an international cannabis market dominated by American firms. That's kind of my base case hypothesis. But I was wondering, how do you
Really?
see international or
That's
global?
interesting because these guys don't care about international. I've been asking them for years and they don't care. They say America is the market. That's all we care about. So I don't think you need to be concerned about that right now. But if we're talking about Altria buying Kronos Group and then trying to dominate the world, I guess that's a legitimate uh, concern. So look, throughout my entire career, and covering cannabis, I should say, I have thought that international would be promising one day, but I felt like it really wasn't worth my limited time. I did not have enough time to get up to speed. And I have to say, today, I'm not up to speed fully, but I have a great appreciation for what's going on. And I am paying more attention. I'd like to be as expert on the markets outside of North America. I'm not even expert on Mexico, which is developing. But in any event, I know that this is becoming more important. And so we are seeing, for example, Israel's medical program has been, uh, as we say in Texas, en fuego, on fire. And it's they're potentially going to legalize. And we kind of joke about Israel's being a teeny tiny country, but it's 9 million people. It's actually not that teeny tiny when you think about how big that market might be.
It's the
So
biggest importer right now, isn't it? It overtook
yes,
Germany.
yep. And so we're going to see that as a domestic consumption market and, possibly a production market. What I've said historically is, if you really believe in the European market as being timely, just own the LPs. They're there and they have it. And, the LPs, that it's an export market, but they've invested in EU production. And so, I think one of the main reasons Afria is buying Tilray is because of their Portuguese facility. And I also should have mentioned, Latin America, there was a lot of excitement there just because they focused on the cost of production being so low, which is true. But what they didn't understand, these investors that were talking up these companies, was that if you weren't GMP, you weren't going to be. And so we have
That's a great
seen,
rhyme.
well, it was true. And so, look, Pharmacielo, which is one I haven't really cared for, I see now, they've gotten religion and they're going to be GMP soon. But Clever Leaves, also on the NASDAQ, also through SPAC, uh, they they're not the only ones. There's a private company we just interviewed at New Cannabis Ventures, but we're starting to see the global trade, and I think adult use, is a much bigger market than medical, but the medical market's massive, and Germany's been a big disappointment. Uh, in terms of the numbers there, the rate of growth, especially considering pharmacy distribution and insurance coverage, the barrier was just like in Canada. It was doctor education, or that's what it has been. But so I look forward to that. I don't see a world necessarily dominated by American companies, or not the American cannabis companies, but I guess over time, I mean, you can see that right now. I mean, if a U.S. pharmaceutical company or CPG company or alcohol company or tobacco company wanted to, they could go right now and start buying up European operations. There's nothing to stop them. It's federally legal. So I don't know that I'd be worried about that.
And you mentioned just before about certain SPACs that are investing in cannabis companies. Now, as I understand it, there are a handful of SPACs that have a huge amount of money that they need to invest in now, in not a huge amount of the time window left for them to invest in these types of companies. What impact do you see SPACs having within the cannabis industry, and do you think this is a good thing?
You know, I'm mixed on SPACs. I mean, I think it has been good for the industry. It's not new. Two of the leading multi-state operators in the United States came through the SPAC process. Columbia Care and Air Wellness. It used to be Air Strategies, and before that, Cannabis Strategies Acquisition Corp. Uh, so these are two of the leading multi-state operators. They came public through the SPAC. It was brutal, and I know the people at the Neo, and uh, I tried to understand why these stocks were doing so poorly. And in the end, I decided it wasn't the Neo necessarily, it was the timing. And so both of these SPACs de-SPACed after the March or April 2019 peak in the American space. And so I think the timing was really tough. So we've seen more SPACs since then. The parent company is another, well, I guess they're a single state operator now, but potential multi-state operator. But the important thing for your listeners to understand is for a SPAC to acquire a cannabis operator, it, it must be through Canada. It can't be a NASDAQ or a NASDAQ listed SPAC. So yes, there are a bunch of SPACs sitting on a lot of money. If it's an American SPAC, it's going to go into an ancillary type company. And, we're starting to see now ancillary companies um, get some more mind share. I've always been surprised at how investors care so much about the plant touching or direct operators and seemed to disregard the ancillary where it's pretty obvious that the companies around these direct companies would benefit in the growth as well. And so
Hmm.
this has been a big change. A SPAC is in the Silver Spike is in the process of acquiring Weed Maps, for example. So these American SPACs that are running out of time, I don't know that there are a lot of good options for them. Now, we've just seen a few more SPACs go public, both in Canada and in the United States. So if these go away, there's still going to be large pools of money.
I think let's talk about these pools of money because we mentioned a bit earlier about how uh, you had maybe some family offices and retail early on, but now it feels like we're really getting tier one capital coming in for wave three. And would you say that these new sources of funds are affecting the way companies are fundraising and also their strategies? I imagine you might have to behave a little bit differently if you're getting investment from an institution than a family office. You might need to commit to different things. Is that going to shape the industry at all?
Yeah, that's a good point, that it could lead to some governance improvements. But I think the governance issues, we've had some in the cannabis industry, and I think that's not a big issue anymore. Most of these boards are independent. There have been a few things that have bothered me, but I think this is a great point about uh, tier one institutions and Wasatch. I followed this mutual fund family for years and had a lot of respect for them, and they have just it's hard to quantify because if they put a couple hundred million into the industry, that's still not a big part of what they're doing, but it's impactful. And so we've seen a bunch of um, tier one or tier two, but true institutions, publicly, very public information about these companies. Uh, we've seen them buy. In wave two, it was the people running these companies or working at these companies, their hands were tied, their compliance department wouldn't let them. And so they would put their own money in, but they couldn't put fund money in. And now the difference is so look, my playbook. Uh, in the past would have said, be careful. We're starting to see all these capital raises. They're going to crush these stocks. Well, that's not happening. And the thing is, and we've seen this for several months now, uh, the institutional investors, especially in the U.S., on the U.S. side, in the direct plant touching, the trading volumes aren't enough for them to be able to take a position. So the way to look at it right now is that these public offerings are how they get in. And so we've seen very narrow discounts to the closing price when companies do raise capital. We've seen very little, if any, warrant issuance. So the deals are getting done at really good prices for the company. So it's changed the way capital's being raised. Uh, that's been one of the hardest things over the last few years to watch the capital raising and the impact it's had on the stock prices. And so that seems to have, it's a 180. What happens now is everybody gets excited because the company puts out a press release. Hey, we just raised capital at a very narrow discount with no warrants, and we had 6 institutions invest. I mean, that's not the way it reads exactly, but I think you get the point. That's what people hear. And so it definitely uh, is changing. And I should just mention there's an additional thing going on. And uh, I don't think that it's a great investment. I actually wrote about that for my subscribers at 420 Investor. And it's not how I would recommend somebody get into the space. But one of the big problems for years has been these ETFs that invest in Canadian LPs, and people get confused. They think they're buying a California grower or something, and it's just the furthest thing from the truth. And finally, uh, advisor shares came up with a better mousetrap. It's an expensive mousetrap, but through the use of swaps, they were able to provide exposure to American cannabis operators, direct operators. And this ETF, which I've been tracking very closely, is now at $1 billion in assets. Now, $1 billion in assets is not really that big of a deal because those Canadian focused ones, one trades on the NASDAQ or no, on the New York Stock Exchange, ARCA, and the other just trades in Canada. But, so others have gotten to a billion, but this is $1 billion into the US. And here's what's unique about it. It allows Robinhood investors or other platforms that don't allow investment. But more importantly than that, it allows financial advisors who work for firms that won't let them put CSE listed or OTC listed names in their account of their clients. And then it allows them to not only access cannabis, but to access it in a diversified way. So the real negative is these swaps are, apparently very costly. They don't break it out, but you can look at the performance, and that's why I say, I mean, if you can just buy into the space, you're probably better off picking a handful of securities than buying the fund.
Now, we probably have time for a couple more questions. And from my side, something that I'd be keen to put to you is that you've mentioned retail investors a few times within this interview, and Robin Hood's come up a few times. Now, earlier this year, we saw outside of the cannabis industry, retail investors almost cause havoc, so to speak, with stocks like GameStop and others of the sort, really experiencing a big retail investor push. And then following that, we also saw some volatility mirrored in a sort of GameStop image, not quite so much so, but we saw Tilray's stock sort of rocket up and then sort of level out a little bit later. With this in mind, what do you think the true impact of the retail investment market maturing within the cannabis industry, and how much sort of future volatility that we see in the market do you believe will be attributed to the rise in retail investors versus the fact that institutions are a lot more active in the space now as well?
Yeah, this is a tough one to answer. And you were right. Tilray has agreed to a merger. I have every confidence that that merger will close on the terms at which the merger was announced. And so if you buy Tilray, if you're a Robinhood investor that buys Tilray, which they've been doing, you have to understand that as that deal goes through, you are locking in an assured loss relative to had you bought Aphria if you hold. But I think their time frame is shorter. They expect to be out of the stock, and who knows between now and then. You know what then looks like, you know what now looks like, but who knows what it looks like between now and then. So I think that was a great evidence of some of the impact on retail investors. And so the retail investors are misinformed. I subscribe to a service whenever there's news, like last week or 2 weeks ago on Monday morning, there was news that Virginia is close to legalizing, and this news service says that the stock symbols impacted are Kronos Group, Tilray, Aurora, and Canopy Growth, who have nothing to do with that news. And that's the kind of misinformation, or it's not it's there's a lack of information. So you have the retail investor getting bigger and bigger, it appears, and not really understanding the true fundamentals, and at the same time, true fundamental investors coming in the market. So I don't really have a great impact, but I agree 100% that it adds to volatility. And so I run model portfolios at 420 Investor, and I don't think there's a lot of investment value necessarily to the largest Canadian LPs, but taking into account what's going on with these technical dynamics, given that I'm measured against an index that holds these Canadian LPs, I don't have the zero exposure that I think they warrant. Let's put it that way.
So, Alan, I think something that we discussed earlier, before we started recording, and something that I know that you would not want to be asked is, what are your favourite stocks right now? Because that is, of course, why people subscribe to the 420 Invest. So, rather than asking for individual picks, what are thematically the winners you believe will come out of 2021?
One of the subsectors that I think is the most undervalued and worth talking about are the Canadian retailers. This has been just mind-boggling to me how you can see these companies that are being formed and people don't seem to care. The reason I say that is first of all, the Canadian market is doing very well. They just released data for December, and the market grew 14% sequentially and over 100% compared to a year ago. And there's a lot of disappointment in Canada, obviously. But when you look at the retailers in Canada, there's several that are publicly traded. They are very well positioned. First of all, they're not weighed down by all the fixed assets that have to be written off still. They don't have that problem like the LPs. They're not burdened by large amounts of inventory. I'm going to flip it. The large amounts of inventory are leading to low prices. The low prices are leading to the illicit market coming into these people's stores. So there's a really good fundamental backdrop. You layer on that the way Canada's market is structured, you're not allowed to advertise. The packaging is very limited. So I think the retailer in Canada has the best relationship with the consumer, not the product necessarily. That's not to say that you can't see some branding do well, and I'll get back to that in a moment. But so you look at that and you say, well, I agree with you. Wow, these companies look pretty good. Their revenue is high and growing faster than the LP revenue, but they must be more expensive. No, these companies they're actually a lot cheaper than the Canadian LPs, and I'm talking about even compared to some of the smaller ones. So that's one of my favorite subsectors. And oh, by the way, I tend to be contrarian, and the you know the number of analysts that cover, say, a Canopy Growth must be 15, 20. There are no dedicated analysts to the Canadian retail side, and very few analysts even cover it. So it's kind of, you know, the way Canada works, you have to go through retail. You can't be vertically integrated, or very limited. So Canopy Growth has a little bit of retail, but they're not even a big retailer, and their hands are tied in certain markets. They can't even sell their own product in certain markets. So half the market is going through retail, and yet only a couple of analysts even pay attention to it. So that's really something I've been talking about for a while, and we've seen some improvement there. And there's three that are pretty liquid. Two of them, actually, I think all of them. No, two of them trade on the TSX and one on the TSX Venture, and two of them are headed to the Nasdaq. So I also think on that same theme, there's so much of a focus on the largest LPs, and the market valuations there are insane, like truly insane. At the same time, there are some smaller Canadian LPs. I think you have to be very careful because a lot of them won't make it. But the ones that can adapt to a very CPG focused market, especially with these 2.0 products, or that know how to market segment and can market premium products. Everybody says they're going to do that, but the ones that can actually do it are going to work out well. So that's my second idea: focus on smaller Canadian LPs. In the United States, I think there's been way too much emphasis on the large operators. Now, don't get me wrong, there are a couple that I really like. I feel like they're undervalued right now. And I also am finding some in the smaller operators that look undervalued. And valuation's kind of tough. I just wrote something today. I don't think valuation should be front of mind necessarily. Should more back of mind for now where we are. I don't think I've been following the space for a while, and very expensive stocks can keep going up. I realize that. So it's more important to understand what's going on fundamentally right now in the technicals as well. But certainly the valuations have gone up. But the part that has stood out to me is the ancillary space. And we've seen some success, like Grow Generation uplisted from the OTC to the NASDAQ. And that stock has been phenomenal. I've been following it since day one. Uh, so I think it's worth your listeners' time to pay attention to some of these ancillary companies. I'm finding some good deals there.
Very good. Okay. And I appreciate you looking out for our listeners with that. So I think we've probably got time for about one last question. And I'll take it a little bit less market driven and a little bit more personal. Assuming you still have your libertarian leanings, when it comes to cannabis from a consumer point of view, what gets you excited these days? I can't imagine you're dabbing waxes, but perhaps you think low dosage edibles are interesting. What innovation in the consumer space excites you, Alan?
Yeah, so my cannabis consumption history started in college, and I don't know what it was. I know I liked it, but I had no idea. And so I think one of the big challenges historically has been, you know, for example, the strains. People will know the names, but the reality is a lot of times what's sold isn't what it's marked as. And so we've evolved a lot. And I live in Texas, so I can't access cannabis here, but I've spent a lot of time in California, Colorado, not in the last year, but I, have a great opportunity. I enjoy cannabis, and I have a great opportunity to learn more. And so I think what we've seen is a lot of innovation. We're seeing innovation in the genetics. We're seeing innovation in the delivery. And personally, I do like edibles. Uh, I don't like smoking, but vape pens I enjoy. And I think, when it comes to things like beverages, they've been very challenging. And we have no social consumption options in the United States. They don't even really have that in Canada. And I think until you really have that, beverages are not going to be a big category. But we're seeing technology improve the formats and the delivery mechanisms. And we're seeing research that's coming out that's helping us to get better genetics, to understand which strains create which effects. We're seeing the technology to help deal with some of the onset issues, rapid onset or too slow of onset, and offset as well. So I guess in a nutshell, what excites me is as the stigma is being eliminated, as the interference with the ability to do research is withering, this allows the miracles of this plant to become unlocked and for people to enjoy uh, alternatives to alcohol, for example, or to improve their lives. So that's what excites me.
Excellent, Alan. And I think we all agree with you that I think it will be a better society where a bit of alcohol might be replaced with cannabis safely, legally, and responsibly. So I think that's a fairly popular viewpoint here on the pod. And with that said, we've had a wonderful time having you as a guest. So thank you very much for joining us. And we look forward to bringing you on next season.
Great. I appreciate the opportunity.
Where do they go, the smoke rings I blow each night? Oh, what do they do, those circles of...
Well, wasn't that a lovely return to the podcast, listener? Well, if you thought it was, or if it wasn't a return, perhaps it was your first time. Either way, do everything in your power to make sure the podcast is a success. And by that I mean the classic sharing, like and subscribing, but also perhaps get podcast-related tattoos. Maybe convert to a podcast religion. I'm not really sure, but I'm looking for creative input here. Until next time, when I'll give you a little bit more of a hint about what we'll be doing differently in Season 3. Goodbye.
I've missed our whimsical outros.
Please take me above, take me with you.